Hey traders, welcome back to Your Nifty Guy. I hope all of you are doing well. Before we begin today's video, pardon me for my voice, the breakage in my voice. I am still under the weather and the throat is completely choked. So yeah, excuse me for that. Today's price action didn't just move around, it changed the entire texture of the market. The structure, the momentum, the intent, everything evolved today. And if you understand exactly how, your trade plan for tomorrow becomes far more precise. In this video, we'll decode what shifted beneath the surface, break down the key levers that got validated or broken, and then prepare a clean, actionable plan for the next session. By the end of this breakdown, you will know whether Nifty is gearing up for a meaningful upside continuation or whether the shift is a warning to stay alert and cautious. If you are finding value in these daily deep dive structure reads, don't forget to like the video, subscribe to the channel if you haven't already, and share this with fellow traders who trade Nifty. And on that note, we'll jump to the part where we'll discuss about today's price action. Markets opened with a slight gap up and then was for most part of the day trading inside the previous day's price action without any clear structure or change in structure. And what looked like a boring sideways day uh, had some firecrackers near the end of the day when market at around 3 p.m. the huge selling came in. Till around this time, we were very cool and comfortable with the sideways price action, which is expected once market has moved quite a bit and then there were some good trending days and which is followed by usually volatility contraction, right? So the selling which came on Friday as well in the second half, today that looked like it was not continuing. And around here, when the previous day's low was broken in this particular candle, the previous day low was breached, and then in the same candle, this candle closed very positive. Uh, Plus the sideways consolidation, it very much looked likely that the prices can break out above this particular trend line which we had drawn, and we can continue the upward journey. But then again, around 3 p.m., good amount of selling came in into the markets, and we have closed negative for the day. I personally did not take any trades today because, of course, there was nothing on the price action throughout the day. It was completely sideways inside a no trading zone, right? We had planned a long entry above this. And for the short entry, I had clearly mentioned that we're not looking unless we get a closing below previous day's low. And unfortunately, today is the day when we have got the closing right. On the daily time frame, if we look at it, so this was the 4-hour fib that we had drawn. We have also broken down below that. We are actually right now at the retest of this particular trend line, right? Now, there are two ways to look at it. Number one, this was a high from which we broke out, and then this currently is a breakout failure, right? Which we are witnessing on the charts. Number one is that. Second, the daily candle that we have, if we decode that, so that is fulfilling all the three conditions for a trend reversal candle that we'll look at, right, on Nifty. So on the daily time frame, the high is lower than previous high, the low is lower than previous low, and we have also got a closing which is below previous low, right? So all three conditions of a reversal candle is there in today's candle. So till yesterday, like I said, my bias is on the long side. Today there is a bit of confusion, right? Because we are at a critical juncture, right? There are two ways to look at it. Like I said, either one, number one, markets broke out of this particular high, trapped the buyers, and has, sorry, coming down back below and after trapping the buyers. Or two scenario which is there is that we broke out of this particular trend line, and now this is going to be a retest of this particular trend line. Sorry for that. And whatever is the scenario, we should be prepared for everything and anything now. Now on the 4 hour, this was the last good swing, and then we have come down. And if you look at on a 4 hour time frame, or we have got a closing below the trend line as well. If you look at on a 15 minutes time frame as well, but then try to understand this trend line is just a reference for us to mark our levels. Usually, trend lines are not just a single line; those are zones. So this can still be just considered as a valid retest of this particular level in case if we are planning to, or in case if price action reverses from here. So for tomorrow, we will not be needing this, this, as well as the 4-hour fib has done its job, right? Now we'll be have to doing the reverse of the fib, right? In case if we are going back up, what is the level of retracements that we can look at? Same is the condition on the 75 minutes time frame. Everything looks a bit confusing, but then our job is to simplify all the confusions. But before we start to prepare the plan for tomorrow's market, word of caution, tomorrow is not just the Nifty's expiry, it is also the monthly expiry. And I would suggest everybody who is trading Nifty and is into option buying, just like me, they should shift their entire trading to the next week's expiry. Instead of trading into the monthly expiry, we can see some volatile moves, right? And that is the reason to safeguard our capital, just pay a slightly higher premium for the entries, but then do yourself a good favor by shifting your trading to the next week's expiry. All right, so that is the usual disclaimer from my end. Apart from the expiry special move that we can play, that is post 2 p.m. based on the open interest and the change in open interest data that we see. All trades to be taken only in the next week's expiry. For tomorrow, of course, number one trade will be for me a trap trade. We get a bearish closing below today's low. The high of that candle gets taken out. I am going long because this might be a scenario wherein we have to take care of all the scenarios, right? So this might be a scenario where this is just a retest. So in case if this is a retest, market works on traps, invite fresh new sellers, then trigger all their stop losses, right? So this can be one scenario. Number one, we'll keep in our mind. Below this, we are absolutely short. Now on the 75 minutes time frame, like I said, now we'll do reverse of the fib. We have these levels marked, and we'll simply mark the 0.5 to 0.618 zone. All right, coming back to 15 minutes. If we are taking the scalp, we'll be uh, looking at closing our scalps around these levels. If we open the gap up and we see any negative price action around this level, we'll still be planning a short trade. Any long trade for me will now only be valid only once again above this, will safely be again above the trend line as well. That will be a reconfirmation. Plus, we will be back above the 0.5 to 0.618 of the this fall which came in right from the last major swing. So that will be like market confirming to us, okay, that our direction or our bias is on the right side only, right? So yes, this will be the simple trade plan for tomorrow. Now, tomorrow will be a bit crucial, but then tomorrow being monthly expiry, sometimes the moves which come in is only expiry bias. So whatever it is, we'll do the analysis tomorrow, post the market once again. Uh, it is time to be cautious and yes, trade carefully is all I can say. Keep the plan very simple. Do not jump into trades. Do not get excited, right? Let the markets commit to you before you actually go ahead and commit to the markets by punching in those orders. And if you are caught on the wrong side, and if the market comes and triggers your predefined stop loss, sorry, predefined logical stop loss, please make sure to take those stop losses, exit the trades, because right now the markets can be brutal. I'll quickly also have a look at the India VIX today. At the start of the day, it was negative. It has otherwise stayed flat on the daily time frame. Okay, like I said, I am bullish on VIX now. We got a breakout. This is a good consolidation. So yeah, uh, things are just I said right now, bit confusing. Let the market give us a more clarity tomorrow or maybe in 2 days' time, and then we can again plan our trades like we used to. So that wraps up today's breakdown. The market has clearly shifted gears, and tomorrow's session will tell us whether this change builds into momentum or fades into noise. Stay focused on the key levels we discussed, stick to your process, and let the structure guide you, not the emotions. If this analysis helped sharpen your plan for tomorrow, make sure you hit the like button, subscribe, and share it with anyone who trades Nifty seriously. Remember, clarity comes from discipline, and discipline comes from showing up every single day. See you in the next one. Cheers, and thanks for tuning in.